and NASDAQ being up 9 or 10% at this point and has had a strong quarter. But the S&P 600 and small caps more generally are up 5 or 6% more than that. That has been on an absolute tear this year, up close to 15% on a growth basis. And you don't need to go stock picking amongst this index to really benefit from this broader sector composition. And in a lot of cases, from a size perspective, small caps are in aggregate about the same size as a lot of these big tech names that we know and love.
Mike, great to have you in person. You're a contributor to A-Invest, but I want to talk with you about your most recent note where you're highlighting to people, if I get this correct, that small cap is outperforming what we all pay attention to, which is the S&P 500. So elaborate, please, because a lot of people want to invest.
Yeah, look, the S&P 600, which is going to be the smaller cap companies from the larger S&P 1500 composite, in aggregate, just have a lot more of a domestically focused footprint and are not the companies that are directly involved in, a lot of the mega cap tech that we just got reporting on last week. But what you get out of that is, a much broader representation of the U.S. economy, typically going to be focused in areas like, industrials, financials, and some consumer discretionary retail type names. So offer quite a different type of profile than the mega cap tech. And that has been on an absolute tear this year, up close to 15% on a growth basis. And most importantly, over the last 6 weeks or so, you've started to see a pretty big divergence between how these companies are doing well and holding up in spite of the broader S&P 500, starting to bifurcate, where you just have the mega cap tech leading at the top and the rest of the S&P 500 kind of staying flat. And so you're still getting a broad participation from this larger sector composition present in the S&P 600 that's not as present in the broader S&P 500 as tech has really rallied back.
So where should people who are watching, if they want to invest in small cap, what should they be looking for? It's not as simple as just pick a small cap.
Well, I think in a lot of cases, it actually can be as simple as picking small caps. I'll tell you one of the reasons I say that. Just looking back at earnings season, last week, we had 5 of the Mag 7 report, and many of these companies, the likes of Google, for example, it's a $4.5 trillion company. Apple, $4 trillion company. And this S&P 600 broad index in aggregate is only about not even quite $2 trillion. So you can buy a broad basket of small cap stocks and, get kind of in a market cap perspective, in aggregate, something that's even smaller than a single name that reported last week. So yes, I do think you can get some broad representation in something like small caps, and you don't need to go stock picking amongst this index to really benefit from this broader sector composition. And in a lot of cases, from a size perspective, small caps are in aggregate about the same size as a lot of these big tech names that we know and love.
So why are they outperforming? I think in the research note that you wrote about a week ago, the S&P 600 is up 7.6% year to date versus the S&P 500. It's outperforming.
Yeah, I think there's a couple of big reasons. One is kind of a broadening out in earnings. And what I mean by that is when you look at the small cap space, they're not dominated by a lot of these mega cap tech AI hyperscalers. And so when you see earnings inflection higher, which we have seen for that index, close to 20% year over year growth, that tends to be very broad-based and a broad-based representation of the economy. And that is a pretty high number for that kind of broad set of companies. Another thing that really works in their favor is much lower just starting levels of valuations. And so, small cap companies, S&P 600 in particular, is going to trade around a 15 or 16 PE multiple, which is a significant discount, compared to, a 23 or 24 for the NASDAQ and top of the market. And so when you see these inflections higher at a kind of a more attractive entry point, as well as just a more cyclical composition overall, the sector composition, it can be a really attractive point when you have a booming economy like we have, and we got that updated data from GDP last week to confirm that.
So why do people overlook small cap, or do they overlook small cap stocks?
Yeah, I think one of the main reasons is kind of going back to some of those market cap data points I mentioned earlier. There's 600 companies in the S&P 600 that in aggregate are a little less than 2 trillion in market cap. If you look at the broader Russell 2000, so 2000 small cap companies, those in aggregate about 3.8 trillion. Both of those numbers are smaller than the market cap of a single Mag 7 company like Apple or Microsoft or Google. So I think they do often get overlooked because these companies tend to be not necessarily names that you hear about all the time because they're going to be involved in a supply chain kind of, on the second tier kind of side of things. And as they become bigger and bigger companies, they simply get upgraded to the mid cap or get upgraded to the S&P 500. So you kind of have a lot of these companies that you may not hear of all the time that are very integral to the supply chain of much bigger firms and kind of are in that transition period of just growing their businesses overall. So they're just not as household names as things like Apple and Microsoft and Google. And so they do get overlooked as a result.
And among people who research these kinds of things, is the expectation that the S&P 600 will outperform throughout the year the S&P 500?
Well, I think that's been something that's heavily debated over the last few years, and I don't think it's a widely held view. And that's what I think makes it quite interesting to look at the performance we've had year to date and just kind of see where things sit. I mean, all the rage is about the rally back from the bottom of the market in the Iran conflict 6 weeks ago, and Nasdaq being up 9 or 10% at this point, and has had a strong quarter. But the S&P 600 and small caps more generally are up 5 or 6% more than that. And so it has been an environment that has been a little bit challenging from a headline perspective, and that has hurt some of the bigger, more valuation sensitive tech names, and they've and such rallied back. But you've gotten also, a really strong performance year to date out of the S&P 600. I think one of the things that people that follow this space are looking for is that kind of broadening out in earnings and those underlying fundamentals. Are they, able to continue to support this market? I think the answer is yes, and I think we've seen a good bit of that thus far this year, but looking for that trend to continue. I mean, one thing I would add is, when you look at something like these small cap stocks, they don't tend to represent a very large part of a lot of people's portfolios. So you can oftentimes think about combining these smaller cap companies alongside a lot of the larger mega caps to create a little bit of a barbell type approach in your portfolio that can benefit, from kind of, both sides winning at the same time. So it can be a definite diversifier to your traditional portfolio.